So this capital gains begins with the very first section, section 45, and popularly called as charging section. The whole section runs into a paragraph, my dear friend. 4-5 लाइन तक का बड़ा पैराग्राफ है. हमें आज सिर्फ याद करनी है पहली लाइन, the first line. And the first line says, I'm going to stop after first line. The first line says, any profit or a gain on a transfer of a capital asset. Any profit or a gain on a transfer of a capital asset. And I'm going to stop with this particular line. I think it's enough for us to discuss and understand. Probably in IPCC, this line must have come and gone within few seconds. And see today what we are going to do. It says, any profit or a gain on a transfer of a capital asset. I take that last word, capital asset. This capital asset has to be understood in proper complexity. Believe me, section 45 has to take the help of some another section to make it charging, effectively charging. And what happens here? You will have to make a habit of remembering all sections. And it's very easy, it's how you make it and look at it. I'll tell you a very, very good case here right now. Right in the olden days, and even today, the young couple always wants to go for a romance on a full moon night. On a dark night, they will not like to go out on a beach, but on a full moon night, they will always like to go out. And that's why Bollywood had one of the most popular films known as Chaudhary Ka Chand. Or the second aspect of this section is to remember that one of our former Prime Minister of India, Jawaharlal Nehru, always loved children. And therefore, the 14th of November has always been celebrated as what? Children's Day. And third to remember, you and I, none can forget that every year, invariably, we celebrate the 14th Feb as Valentine's Day. So this 14 might be Chaudhary Ka Chand, that 14 might be a Children's Day, or that 14 might be a Valentine's Day, so what? IT people took that 14 in the definition section, which is a section number 2 into bracket 14, defined this word capital asset. Because it's so dear to everybody. Everybody loves that capital asset, maybe jewelry, maybe a plot of land, maybe a house, maybe a bungalow, or maybe a different shares of the different companies. We all love to have it. And that's why probably the lovable things go with that number 14, 2 by 14, you can easily remember. Now such a capital asset, with all its inclusions and with all its exclusions, have created n number of controversies as to what constitutes a capital asset and what does not constitute a capital asset. 2 by 14 very clearly said that stock in trade will not be a capital asset. They also say that the personal effects will not be a capital asset. They also said the agricultural land in the rural area will also not be a capital asset. And finally, notified gold bonds, defense bonds, etc. shall also not be called by the word as capital asset. I'm not going to touch all those basic things, but I'm going to pick up only one, and that's the case of personal effects. What do you understand by personal effects? Personal effects are normally those having a characteristic of movable. They are normally movable. And number two, they should be of day-to-day use. If these two characteristics are there, by and large, you will be able to categorize them as personal effects. And if it is a personal effect, it is not a capital asset. Let's take first example. The chair in which you are sitting, is it movable? The answer is yes. Is it of your day-to-day use? The answer is yes. Then, my dear friend, that chair, that furniture is not a capital asset. So when you sell a chair at second hand, whatever profit you make or whatever loss you make, you cannot call it as capital gain or capital loss. That's the fundamental thing. Number two, take the case, the building in which you are residing. Is it movable? No. Is it of day-to-day use? Yes. But since it is fixed, not movable, it is not a personal effect. Building will be called by the word as capital asset. Third thing, let's take it. The wearing apparels, the clothes that you wear, are they movable? Yes. Are they of day-to-day use? The answer is yes, by and large. So when you sell off your wearing apparels and you make a profit, should not be called by the word as capital gains. Take another case. In your house, in your kitchen, there are utensils. Are they movable? The answer is yes. Are they being used of day-to-day use? The answer is yes. And therefore, utensils will be called by the word as personal effects. Now, I have got for everything a contradictory example. Say I was a filthy rich man. I got some lottery. So I made a teapot, a center teapot in my drawing room. And I asked my carpenter that on the four sides of the border of that teapot, put there a metal called gold. And between the two borders, fit there the diamond stones. Then I go and sell it off. Can it be called personal effect or will it be called as capital asset? That's my question. And remember, an exception to exception 2/14 has already made in your IPCC. What was that? Exception is personal effects. So if you take a necklace, is it movable? Yes. Is it of day-to-day use? Yes. The necklace should have been called as what? Personal effects. But 2/14 said no. Jewelry will be called as capital asset. Anything which is made up of precious metals, precious stones, or alloy of precious metals, it will be called by the word and jewelry is a capital asset. Today what I did with the furniture. On the teapot, I fitted that precious metal gold, I fitted that precious stones. So furniture has lost its characteristic of being called as personal effect. The teapot, when it sell it, it is a characteristic of what? Capital asset. And therefore, I will be subject to capital gains. Take another case, that wearing apparel. I don't know if you have your grandma, ask them when she was married and she was given her wedding sari and the embroidery that was made in those olden days was always made of the genuine, the real silver thread or golden thread. Today nobody does that. But let's say today if somebody does that. On a wedding sari, they do the entire embroidery of the real pure silver thread and a golden thread. And I hope nobody has to do that. That wedding sari you have to go and sell it off after 5 years. And if you sell it off, You get a big price because it has got genuine old precious gold as well as silver. And you make a profit on that. Will it be subject to capital gains? And my answer would be yes. Because anything that contains precious metal or precious stones would therefore be called by the word as jewelry. So plain wearing apparel, plain furniture is not a capital asset. But furniture with gold and diamond or sari with gold and diamond will become a case of capital asset. Are you clear about this? Okay. Now I'm going to give you a next question to you here is, let's say I'm a filthy rich guy and I have got in my kitchen not the utensils of stainless steel or melamine or brass or copper, no. I have all my utensils made of silver. आपके घर में भी होंगे चांदी के ग्लास, चांदी की प्लेट, चांदी के बॉल्स, चांदी के चमचे. Now what happens is, normally I keep all this in my cupboard lock and key. When somebody VIP is going to come, I'll take it out, lay it on my dining table, offer the lunch or a dinner with the silver utensils, and when they go off, I clean them off, count them, recount them, and put them back into lock and key. One day I decide to go and sell it off, these silver utensils. I made a huge profit because they were purchased in the olden days at a very low price, and today when gold silver prices are going up, I make a large money out of it. पता नहीं कहीं से टैक्स डिपार्टमेंट को पता चल गया, उन्होंने नोटिस भेज दी, बोले भिक्षान देही, हमें हमारा टैक्स चाहिए, कैपिटल गेन्स. I said to them and replied to them that this utensils and silver utensils are movable things, are of my day-to-day use, they are personal effect, you cannot call it capital asset, and therefore it is out of section 45. Friends, the case went to the court. Jayantilal A. Shah versus CRT in Bombay High Court, and Bansirilal in the Calcutta High Court. Both high courts have decided in the same way with regard to the silver utensils. The assessee claimed, I was born with a silver spoon. I can afford to have my silver utensils in my day-to-day use. Who can stop me doing that? So for me, these are of day-to-day use. They are movable, and therefore they should be called by the word as personal effects. Believe me, Calcutta High Court and Bombay High Court in these two different cases have come out with a similar judgment, and they said that silver utensils by tradition in India has been utensils of being used regularly in the kitchen, and therefore silver utensils are personal effects, are not capital asset, and when they are sold, section 45 cannot be applied. This is how Jayantilal A. Shah versus CRT in Bombay High Court was decided. Friends, it created one more question. Remember, the privy purses were abolished during 70s by the then government in India of the former Maharajas and Maharanis. They were given some annual pension by the government. One fine morning the government says, no, we don't have money and we are going to stop it. Now these Maharajas had never done any job. They cannot work now. So one after the another, they started selling off their assets like jewelry. So much so to that A day came when one of the Maharaja sold off those old silver and gold coins. सोने और चांदी के जो सिक्के थे उनके पास, उन्होंने वो बेच दिए। आमतौर पे हम लोग सोने और चांदी के सिक्के की पूजा करते, दिवाली के समय पे, धनतेरस के समय पे हम उसे महालक्ष्मी मान के पूजा करते। They are deities. We worship them. But the crisis was so much that the Maharaja had to sell it. Now once the Maharaja sells it, it becomes the talk of the town. Department came to know. They issued the notice to him. और फिर से सरकार की ये नोटिस आई, भिक्षांदेही, हमें हमारा टैक्स चाहिए। And the assessee refused. The case went right up to the Supreme Court. His Highness Hemant Singhi versus CIT was decided in Supreme Court. His Highness H.H. Hemant Singh. What was that case? In this case it went similarly. And believe me now what Supreme Court has decided. They said that these old silver and gold coins which were worshipped once upon a time, and if they have been sold, it is a case of a capital asset. Though they are movable, though they are of day-to-day use, it will not be called as personal effect, will be called as capital asset, and capital gains are chargeable on it. You ask me, sir, what was the logic? I can tell you the logic in a second. I go to that conclusion paras of that case wherein the court has written what it is written. That it was a matter of pride and possession. I am repeating the word. It was a matter of pride and possession, and that's why these silver and gold coins are a case of capital asset. To make this idea go right to the home, I am giving you one example. That on a Friday night I wanted to visit my friends. So I decided that day, and while I was going out, I took few of the silver and gold coins in my pocket, because my experience in the past parties was nobody was talking to me because I was an outsider. Since I was an outsider, I thought, let me break this talk with everybody. So I stood in that group and started putting my hand in the pocket and creating a noise with those coins. The moment it started creating noise, the next person who was standing to me, he said, "What is that?" And I was really waiting for that conversation. So the moment he asked me, "What is that?" I took out those coins and I showed him that these are the coins which is making the noise. So he took it in his hand, then he looked at up and down, passed it on to the second, third, fourth, 10th, everybody started talking, and after 5 minutes the coins came back to me. When the coins came back, with a little smile on my face, I asked everybody that these are the coins I am having from my grandfathers. Do you have anybody? And everybody said no. And when everybody said no, there was a smile further. And what was that? It was a matter of pride and possession for me that I have and then they don't have. That created a valuable asset for me. And that changed the characteristic in the language of Supreme Court, that it was not a personal effect but a capital asset, and therefore 45 was applicable. This way we decide what is a capital asset and what is not a capital asset. Look at to my first line. Any profit or a gain Okay, any profit or a gain on a transfer of a capital asset. So we saw what capital asset is. I'm not going into those questions of agricultural land in rural area versus urban area, because that was being done in detail at the IPCC. But I'm going to an important terminology here, and that is transfer. Transfer is 2 into bracket 47. Definition section is always 2. So capital asset was 2 by 14 and transfer is 2 by 47. If you read the first line in the bare act, it says what? Transfer means and includes in relation to capital asset as follows. It doesn't stop this way. Transfer means and includes. Transfer in relation to capital asset means and includes the following. It means the definition of transfer here 2 by 47 is only applicable and only applicable to the capital asset. It means what? A sale, a exchange, a conversion, a relinquishment, an extinguishment, and a compulsory acquisition, as well as the possession in relation to the compliance of a contract. And that finishes the definition of transfer. You will say what it means, all this. A sale. Sale means what? A change of ownership. Sale doesn't mean a change of possession. I may give you a thing, you may possess, so what? You are not the owner. To be an owner, that is the fundamental thing in a sale. You will say, give us one example. Let's go to your college, borrow a book from the library. The book is with you. The possession is with you. Are you the owner? The answer is no. Therefore, college has not sold the book to you. In a sale, essentially what should happen is a change of ownership, the titles. And what is change of ownership? You should be the sole and the absolute owner. You have the right to acquire, you have the right to possess, and you have a right to dispose. ये तीनों अधिकार अगर आपके पास है तो आप ओनर हो. If you cannot sell without asking somebody, you are not the owner. If you cannot use it this way or that way without asking somebody, you are not the owner. Therefore, to be an owner, you should have the absolute rights to acquire, to possess, to use, and to dispose. Number 2, an exchange. Transfer means an exchange. What does the word exchange means? You give one thing and in return you take another thing. Say for example, I gave a plot of land to you and in turn you give me the jewelry of that value. There is no cash involved, no check involved, no RTGS involved, no NEFT involved after this 8th of November. So neither there is RTGS nor there is NEFT, no digital payments have come, no checks have come, no drafts have come, but I gave you a plot of land and you gave me the equivalent value of jewelry of gold. My dear friend, there is a transfer. The land has been sold to you, you have paid me the price, and the price was not by check or draft but was in kind, and that is called by the word exchange. So transfer in relation to capital asset means and includes number 1, sale, number 2, exchange, and number 3. So now the third aspect is conversion. And whenever I talk about conversion, my dear friends, those who have done this conversion in detail at IPCC will never ever forget the historical and landmark case of by Shirin Bhai Kuka versus CIT in the Supreme Court. In this case, what actually happened was, by Shirin Bhai Kuka was holding some shares, and these shares were her capital asset. She one day decided, after holding those shares for 4 or 5 years, she decided one day that it will be now transferred to a business unit in which she is going to do the business of buying and selling of shares. So the day she converted her personal shares, which were capital asset, into her own proprietary fund, business firm, wherein she was to do the business of buying and selling shares. So shares in the business firm became what? Stock. They were with her in an individual capacity. They were here as a capital asset. But the firm was also proprietary. So when they were transferred, they were capital asset. But subsequently, when the business firm sold it in the market, at that day it was supposed to be a stock. So that day it was not a capital asset. When transfer was done, it was not a capital asset. And when it was a capital asset, there was no transfer, because shares belonged to her individually, and in proprietary firm also it belonged to her. So what we wanted, the two things to happen simultaneously, that there should be a transfer of a capital asset. Transfer happens, but capital asset is not transferred. Simultaneously, if two things are not happening, it will not be called by the word as chargeable transaction under 45, and that is what Supreme Court say. Thereafter, सुप्रीम कोर्ट में भी हार कर हिम्मत न हारने वाली हमारी सरकार ने नेक्स्ट बजट में अमेंडमेंट लाए, एंड नाउ वी से दैट द कन्वर्शन of capital asset into a stock would be called by the word as transfer. We changed the law. Therefore, the entire judgment of the Supreme Court has been overturned. And the fourth part of the word transfer, which is called by the word relinquishment. To relinquish. It comes from the word to relinquish. And what does relinquish means? To give away, to forgo. When you sacrifice something and give away, we say you have relinquished. And in final CA, every section has got one case law, minimum. And you will say, sir, how to remember these case laws one after the another? By this time you have talked about Jayanti Lal Shah. By this time you have talked about His Highness Hemant Singhi. By this time you have already talked about Bhai Shirin Bhai Kuka and so on. And yet the section is the same, 2/47 or maximum 214. Yes, my dear friend. As we move with the sections, these case laws will come, but then there is a way to remember always. What does this say? To relinquish means to give away. किसी भी चीज का त्याग करना, छोड़ देना. That's called by the word relinquishment. और अच्छी बात तो यह है कि ये छोड़ना, त्याग करना, उसके साथ जिस व्यक्ति का नाम जुड़ा है केस लॉ में, उस व्यक्ति को भी आप पहचानते हो. मैं एक बार पिक्चर देखने गया था, गया के वापस आया, दूसरी बार गया तब भी हाउसफुल था, और मैंने देखा तो मूवी का नाम भी था हाउसफुल 2. और जब मैं जाकर अंदर बैठा तो मुझे वहाँ पे कैपिटल गेन्स का सेक्शन 2/47 याद आया था. कब? जब गाने की वो शुरुआत हुई थी कि सब छोड़ छाड़ के अपने सलीम की गली, अनारकली डिस्को चली. माय डियर फ्रेंड, ये सलीम की अनारकली थी. आपको याद रखना है अनारकली साराभाई वर्सेस CIT इन द सुप्रीम कोर्ट. व्हाट वाज दिस अनारकली साराभाई? Sarabhai was a very popular industrial house in Gujarat, and one of the person named from that family is Anarkali. She was holding redeemable preference shares. And when these preference shares were redeemed at the conditions or the terms of issue at a premium, she made a profit out of that. What she gave away, sacrifice, kya tyag kar diya unhone, were her rights in that shares. And in turn, she got a consideration, and out of that she made a profit. The Supreme Court said that redemption of redeemable preference shares at premium is a fit case to be charged under Section 45 as capital gains. Not only that, there is another word. The transfer means extinguishment. And what is extinguishment? The extinguishment of your rights in an asset. The extinguishment means extinguishment of the asset itself. मान लो कोई एसेट के आपके अधिकार है, वो अधिकार नष्ट हो जाते हैं. कोई एक ऐसा हादसा होता है, the accident happens, let's say for example the fire takes place. And when the fire takes place, your asset gets destroyed. You lose all your rights in it. It will be as good as you have transferred that asset. Another landmark case is attached to this, though it has been overwritten, but fit to remember, was the case of Vanya Silk Mills, where the book value of the factory shed, which was completely destroyed in the fire, was too less. And there was a fire insurance policy. They got a compensation from the company. The claim was received, but it was on a replacement basis. So there was a big difference between the amount received from the insurance company versus the book value, and the department issued a notice that this was nothing but the capital gains. The assessee refused to accept that. Case once again went right up to the Supreme Court, and Supreme Court has considered the basic aspect behind the insurance policy. Okay, whenever you take out any policy, fire insurance policy, marine insurance policy, motor accidental insurance policy, medical claim policy, what is one of the basic principles is the principle of indemnity. What is that? Principle of indemnity. To indemnify, I can make my losses good. I can make my losses and only losses good, nothing more than that. I can never ever make a profit out of insurance policy. No insurance company will allow you to do that. So when I received the money, I just received my loss, that's all, nothing more than that. Where is a question of profit? And this has been nailed down by one of the beautiful one single line by the Supreme Court. Look at the words the court has used. That what assessee received, remember these words, what assessee received was a compensation and not a consideration. What he received was a compensation and not a consideration. So if it is not a consideration, your Section 48 calculation cannot start. He has not received any price. One more time, the government lost the case. One more time, we waited for the next budget to get an amendment, and now today the Section 45 includes and says that any insurance compensation received will be chargeable to capital gain tax. Under the word transfer is extinguishment of capital asset. If this was not enough, my dear friends, we have one more thing in this word transfer, is that in a part or a full performance of a contract, if you get a possession of an immovable property, in a full or a part performance of a contract, it would be as good as transfer. You say how? I give you a simple example. A builder has appointed an architect to prepare design, get the plans approved from the municipality, and then finally give the certification. So architect does that, his fees were decided, but the mode of payment was part in cash, part by check, and the major and a substantial part will be given by allotting one flat into that building. So now, when architect has done the job, the builder gives him one flat towards his fees. I put that word. In a part or a full performance of a contract, if you are in a possession of an immovable property, it is as good as what? Transfer. Even though their agreement may not have been registered with the stamp duty officer. So what? It is as good as a transfer. And in a case of cooperative societies, particularly in the case of housing cooperative societies, when you become a member by purchasing the shares of that society, the transfer of the shares from one person to another person is as good as a transfer, because the entire building remains in the name of the society. Your shares are transferred, and by changing the share name, shareholder's name, you are changing is the ownership of that immovable property. So you might say, okay, this is not a transfer. It is a transfer in a cooperative society because you are always a member. The house building always remains in the name of society, not in the name of the individual members. And this is where your section 247 now comes to an end. So two words I have taken: any profit or a gain on a transfer of a what? Capital asset. Capital asset was 2 by 14 and transfer was 2 by 47. So after section 45, the first line, any profit or a gain on a transfer of capital asset will be subject to tax. But this follows by a very important two sections called 46, 47. And you are going to just ask me, sir, you explained 2 by 47 transfer so much in detail, and now immediately you are going to talk to us something completely reverse and opposite direction. Because 46 and 47 are the two sections wherein the transaction is really, truly, technically, by all means, is a transaction called transfer. But in spite of that, the 46 and 47 says that these transactions will not be regarded as transfer of capital asset. कहने का मतलब है, हर हालत में ये जो ट्रांजैक्शंस ट्रांसफर के हैं और होते हुए भी ये सेक्शन 46, 47 ये ऐलान करते हैं कि हम इसे ट्रांसफर मानने से इनकार करते हैं. Let's take a small section 46 first. It's divided into two parts, part 1, part 2, 46.1 and 46.2. What does that 46.1 says? It says that 46.1 here that whenever assets are distributed by a company to its shareholders on its liquidation, whenever assets are transferred by a company to its shareholders on its liquidation, it will not be regarded as a transfer for the company. On its liquidation. जब कंपनी बंद होने की है, उस वक्त अगर कंपनी ये सारे एसेट्स का बंटवारा करती है अपने शेयर होल्डर्स के बीच में, तो कंपनी के लिए ये ट्रांसफर नहीं माना जाएगा और इस पे किसी भी प्रकार के टैक्स नहीं लिए जाएंगे. Anybody can ask me a question, sir, why this provision was made? I have an answer to that. In a liquidation, The company, when it goes into liquidation, that means it must have a history of past losses, accumulated losses over years. There was no way to take a U-turn, and therefore they decided that we are going to liquidate. So loss-making concern is proved here. Assets are less, liabilities are more. अब जब बंटवारा करना है पैसों का, पैसे कम है, तो naturally the secured creditors will get the first, then the unsecured, and finally the shareholders. So government thought, okay, when there is already a less money, in the interest of the general public at large, let us give away our right. Let creditors get, let unsecured creditors get, and let the investors, the general public get. We can stay away from this by charging tax. And probably that was the logic in bringing this section 46(1). And that's why they said, when a company distributes its assets to the shareholders on its liquidation, it will not be subject to the capital gains because it is not a transfer. And I appreciate this approach of the government. So now let's say you are a shareholder, you were holding 200 shares, and the company transfers to you, in lieu of the 200 shares, you are being given a small 10 by 10 area office of the company. You gave away shares, the company gave you that 10 by 10 office. Now to you, as a shareholder, will it be subject to tax? कंपनी के लिए टैक्स नहीं है, लेकिन जो इंडिविजुअल शेयर होल्डर अपने शेयर्स वापस करते और बदले में कोई एसेट लेते हैं, तो क्या शेयर होल्डर पे यह टैक्स लगेगा या नहीं? तो 46 into bracket 2 says yes, the shareholder will be subject to tax. Now there is no sympathy. The sympathy was towards company because company was to distribute money to everybody. Whereas here, the individual shareholder is going to get the benefit. So to the shareholder, capital gains will be chargeable. How would you charge? You have received the price by way of 10 by 10 feet office. So we will take the FMV. What is FMV? Fair market value of that asset. उसकी आज की बाजार की कीमत ले लेंगे, वो आपको कीमत मिली है, माइनस द कॉस्ट ऑफ योर शेयर्स. जितने पैसे में आपने शेयर्स खरीदे होंगे, वो शेयर्स अब माइनस करेंगे. So value of the property minus the cost of the shares. Still I will not call it by the word as capital gains. वो डिफरेंस में से एक और चीज है, सेक्शन 2 into bracket 22 which talks about deemed dividends. And if this company is having any capital reserves or reserves, though they are not distributed today, but they belong to whom? Ultimately shareholders. And you are one of the shareholders. So you have a proportionate right in those reserves. So you were holding 5%. Then 5% of that reserve will be taken and will be minus out of that difference. Fair market value of property minus the cost of the shares minus your share in the reserve, which will be called by the word as deemed dividend. And after that, whatever remains will be called by the word as capital gains. So this is what 46(2) talks about, two sides. One on the company side, no tax because it is not a transfer. Number 2, on the shareholder side, it will be taxable after minusing the cost of the shares and also after minusing any deemed dividend, the proportionate deemed dividend to which the shareholder is entitled. This was a short story of 46. But when it comes to 47, my dear friend, 47 is a long story. Starts with number 1 and ends with, I think, almost like 15, 16 items. Some are outdated. But the major one, on which many a times the questions are being asked practically, you need to have a bird view, aerial view. We need not go into the minute details of those provisions, because at glance you should be able to realize whether this transaction is a case of a transfer or is a case of under 47 an excluded transfer. Number one. When company liquidated in 46, you said, okay, company will not pay tax. तो हमारे हिंदुस्तान में अगर एक को अगर आप एग्जाम्पशन देते हो तो सब लाइन में कतार में खड़े हो जाते, मुझे क्यों नहीं? HUF वाले आए, Hindu undivided family. When it gets total or partial partition and the karta of that HUF starts distributing assets to its family members, they said, if you give an exemption under 46, you don't consider it as transfer. For HUF also it should not be transfer. And section 47 said, yes, when assets are distributed on a total or a partial partition of HUF, it will not be treated as a transfer. फिर आई बारी, पार्टनरशिप फॉर्म वाले आके खड़े हो गए, हमें भी दो, सरकार ने दिया एक बार लेकिन वापस ले लिया. The government gave that excluded transfer under 47 to the partnership firm, that when partnership firm dissolves and distributes the assets to its partners, it will not be called as transfer. But my dear friend, for that we are responsible. बड़े पैमाने पे लोगों ने इस सेक्शन का मिसयूज किया है, अब्यूज किया है, और वक्त ऐसा आया कि सरकार ने उस नियम, उस कानून को वापस लेना पड़ा. So today what is the position? Today the position is, if the partnership firm dissolves and distributes its assets to its partners, it will be called as transfer and it will be chargeable to tax to the partnership firm. This is the outcome under 47. Another aspect. Father prepares a will, and after the death of the father, the property passes on to the legal head, the son and the daughter. It's a transfer. But in this transfer, the father does not charge any price and the son and the daughter also does not pay any price. Therefore, section 47 said that whenever an asset is transferred by will, it will not be called by the word as transfer. फिर लोगों ने निकाले और तरीके कि the father gives during his lifetime to his wife or to his son or to his daughter the house property by way of preparing a gift deed. They prepare a deed under which the gift is given by the father to the son. In a gift you don't charge a price. And this is a gift within the family. This is a gift within the terminology called relatives. And therefore, it will not be subject to tax. And therefore, section 47 says that this gift will not be considered as a transfer. One more thing, and that was a transfer which is called by the word as irrevocable. Irrevocable transfers which you cannot revoke. I hope you understand the word to revoke and irrevoke. To revoke, that means you can cancel. Today you transfer and after 2-3 months I can cancel out that. If that is the case, it will be called revocable transfer. Suppose tomorrow morning I say that I am transferring this asset and within 1 year you should get your mother cured of a particular disease. If you don't do that, after 1 year the property will belong to me. Then I am transferring, but on happening or non-happening of an event, I make a condition, the property should come back. Then this transfer is not an absolute transfer, it is a revocable transfer. And what I have used the word, if the transfer is irrevocable, then it will not be called by the word transfer here. So, gifting by will or by irrevocable transfers, if the asset has been given, then it will be not taken as a transfer under section 47. This was not enough. Remember, in those days of IPCC, you were talking about an capital asset. remember the word, capital asset transferred as capital asset. यानी जो कैपिटल एसेट है आज आपके पास, जब आपने ट्रांसफर किया तब भी कैपिटल एसेट था, और जिस किसी के पास गया उसके पास भी वो कैपिटल एसेट के तौर पे ही गया. ऐसा नहीं कि मेरे लिए कैपिटल एसेट था और मैंने जिसको दिया उसके लिए वो स्टॉक इन ट्रेड बन गया, ऐसी बात नहीं है. So capital asset is transferred as capital asset by whom? By a holding company to its subsidiary company, and a subsidiary company being an Indian company. It will not be called as a transfer. But that subsidiary company should not be only Indian company, it should be 100% subsidiary company. ये कंडीशन लगाई 100% सब्सिडरी के कंपनी के शेयर्स किसके पास होने चाहिए? होल्डिंग कंपनी. अगर 100% शेयर्स होल्डिंग कंपनी के हैं, इफ होल्डिंग कंपनी होल्ड्स 100%, then where is a different entity? The ownership is the same. So whether the asset is with holding company or whether asset is with subsidiary company, it means one and the same, and therefore it will not be called as transfer. Reverse. When a capital asset is transferred as capital asset by a 100% subsidiary company to its holding company, comma, a Indian company, will also not be called by the word as transfer. ये दोनों कंडीशन हमने रखी है, दोनों में होल्डिंग कंपनी सब्सिडरी को दे सकती है या सब्सिडरी कंपनी होल्डिंग को दे सकती है. The receiver always has to be Indian company. The giver may be a foreign company, that's okay. Holding company, I said subsidiary has to be 100% an Indian company. जब मैंने subsidiary से start किया, I said 100% subsidiary. When it gives to holding company, the holding company should be an the holding company should be an Indian company. Meaning receiver is always an Indian company. दो और हमने condition रखी है कि the receiver, whosoever it is, will receive the capital asset and shall hold that capital asset for another period of 8 years. 8 years. आने वाले 8 साल तक वो कैपिटल एसेट को कैपिटल एसेट की तरह ही मेंटेन करेगा. Number 2 condition. The 100% subsidiary company, that shareholding, will remain at 100% for another period of 8 years. यानी 8 साल के दौरान वो 100% शेयर्स जो हमारे सब्सिडरी में है वही रहने चाहिए. It cannot be even 98%. The day you do that 98% is violation of condition, exemption will be withdrawn. 8 साल के पहले अगर आपने उस कैपिटल एसेट को बेच दिया, you have violated the condition, so once again it will be the exemption will be withdrawn. And this is all said not by 47A gave these conditions and also said in violation how it will be, the tax will be recovered. This is the beginning part, the initial part of section 47, and then it follows with amalgamation, demerger, conversion, reverse mortgage, etc. And we will consider that now. Under section 47, we were going through the various items that were really and technically as transfers, but we said no, it will not be considered as transfers for the purpose of capital gains. Let's come back to those transactions. Number 1, amalgamation. In an amalgamation, when an amalgamating company transfers its assets to what you call the amalgamated company, at that time, it will not be regarded as a transfer so long as one condition has been fulfilled that the amalgamated company is always and always an Indian company. Very parallel, but exactly opposite is a case of a demerger. In a case of a demerger, what happens? The demerging company transfers its assets of one of its units to a resulting company, and that resulting company is also an Indian company, we will not regard this transfer as a transfer of capital asset, and therefore it will not be called as a transfer, will not be subject to capital gain tax. So what really happens here in these two cases, that a new company called amalgamated company and here the new company called resulting company both need to be an Indian company. If that is the case, we will consider this as not a transfer. The outcome of this, what happens is, in the purchase consideration, when the amalgamated company gives to the amalgamating company and in turn to their shareholders, when shareholders receive the shares of the new company called amalgamated company in place of the old company's share, it will again not be called by the word as transfer. If this was not enough, we say when a partnership firm gets converted into a company and transfers all its assets and all its liabilities to the company, all partners continue to be the shareholders of the company, and so much so that they hold not less than 50% of the total voting rights. And they continue to hold that voting rights for another period of next 5 years. If this whole thing happens, then transfer of the assets by the partnership firm to a company will not be called as a transfer. The last and the least part is sole proprietary firm. When it gets converted into a partnership, at that time also, conditions more or less same like partnership. All assets, all liabilities need to be transferred. To whom? To the company. The proprietor should hold more than 50% of the voting powers, should continue to hold for another period of 5 years. If this happens, then transfer of the assets by the proprietary firm to the company will not be called as transfer. Came very recently that a company now converts itself into an LLP. Then what happens? One or two new conditions. This can only happen if in the last 3 years the turnover of the company never exceeded rupees 60 lakhs. And the shareholders of the company continue to become the partners in the LLP. They continue to hold those what you call their voting powers in the LLP in the same proportion, and that should also be more than 50% of the total voting powers. If these all happens, then transfer of the assets by the company to LLP will also not be called by the word as transfer. And finally, to help all senior citizens, few years back, the government introduced one new system which was called not mortgage but reverse mortgage. In a mortgage, you pay the EMI to the bank. In a reverse mortgage, it is completely reversed. The bank pays you EMI against mortgaging of your property. And this facility was given only to senior citizens. It will not be called by the word transfer. Only thing is here, tomorrow morning, if the money is not repaid to the bank at the maturity, then bank may go and sell off that property. At that time, it will be called as a transfer of capital asset, and capital gains will be liable to that particular person who had borrowed or to his legal heirs for the recovery of that amount. This was all with section 47. So what I did, 46 and 47 were essentially, technically, really, genuinely cases of transfers, but we have gone and declared them that they shall not be considered as transfer for capital gain tax. So by this time, we have done 3 sections. What were they? Number 1, section 45, the charging section, which included a capital asset is 2 by 14 as well as transfer 2 into bracket 47. And the moment we did transfers, we went ahead and said, okay, what are excluded transfer? And for that we did was section 46 and section 47. Once these preliminaries are over, my dear friend, there comes a very important, a vibrating section of the entire topic called section 48. Look here, this section 48 is going to tell you exactly how to compute the capital gains. In other words, it's an entire mechanism of how to calculate this capital gains, may it be a short-term capital asset or may it be a long-term capital assets. सेक्शन 48 के द्वारा हम ये जानना चाहते हैं यहाँ पर कि किस तरह से एक कैपिटल गेन्स की गिनती की जाएगी, चाहे वो एसेट फिर शॉर्ट टर्म हो या लॉन्ग टर्म कैपिटल एसेट हो. The fact that the chronological order, the serial order in which section 48 has given, that mechanism has to be followed exactly. Meaning, you start for short-term capital asset with full value of consideration. What is that word? Full value of consideration. I could have used the word selling price. But knowingly and purposefully we are not using the word selling price, but on the contrary, we are using the word is a full value of consideration. Full and complete without any discounts. May it be trade discount. Without that, what is that full value? That will take, may it be on basis of action, may it be that full value consideration, may it be on the basis of FMV. FMV का मतलब होता है fair value market. FMV, fair value in the market. So either you take that or you take the actual price that you have received, and that will be called number 1 to start as full value of consideration. Section 48 allows you, number 1, is all your transfer expenses related to the transfer of the asset can be deducted. आप पूछेंगे ये क्या चीज है? जब कभी आप किसी एसेट को बेचने जा रहे हो, ट्रांसफर करने जा रहे हो, उस वक्त के उसके साथ जुड़े हुए सारे एक्सपेंसेस आप यहां पे क्लेम कर सकते हो. जैसे कि आप एक मकान बेचते हो, you sell a house through a broker, so you pay what? Brokerage. That brokerage would be available to you as a transfer expense. You sell the shares through a broker and you pay the brokerage. That will be called here by the word as transfer expenses. You make some legal documents, and that is your expense related to the transfer. It will be called as transfer expenses and you can claim it. So my first two item is the full value of consideration. From that you minus the transfer expense. So once again you get consideration. But that will not be called full value. It will be called by the word as net consideration. And it is net consideration. Once that is arrived, you see here two things I am able to claim as deduction. Number 1 is the cost of the asset that has been transferred. What was its cost? when you acquired it. Now, I'm using the word cost, I'm not using the word purchase price, mind you. I could have used the word purchase price, but no, I am saying the cost. There is a kilometers difference between the word purchase price and a cost. When I say cost, it means landed cost, which might include purchase price, plus any expenses which were incurred at the time of purchasing an asset will also be added to that amount. So I get from that purchase price, I get is a cost. I minus that. And let's say I will go and minus the second one is the cost of the improvement of the asset. Now this is something different. Cost of improvement of asset. Say for example, 5 years back I purchased an asset. Or let's say, to make it more simple, because we are talking about short term, so let us say this building was purchased a year back. So it is still a short term capital asset by the period of holding. And now, in the second year, what I do is, I make some major changes in that particular house. Is not repair, no. Repair would have been called revenue expenditure. This is absolutely not repair, but these are major repairs, renovations I have done it. And that has improved the asset durability. The life of the asset has been increased, and that will be called as cost of improvement. So anything which I have spent to improve that asset would be available to me as a deduction. Two things I minus: cost of asset as well as the cost of improvement of asset. From what I minus? From the net consideration. So after minusing these two costs, whatever the resulting figure would be there will be called by the word as gross short-term capital gains. What I am using the word? Gross short-term capital gains. It's still gross. So to make it as a net short-term capital gains STCG, what I have to do is I will go and tap one more section which we are going to do subsequently, is the section of exemptions. From where it comes? From section 54 and its corollaries. अभी हमने किया नहीं है तो शायद आपके लिए, लेकिन IPCC में आपने किया होगा 54, 54B, 54D, 54EC, 54EE, 54G, GA, GB. These are all various provisions of the exemptions. And we will pick and choose what is applicable to short term. You can take 54B for short term. You can take 54D for the short term. You can take 54G for the short term. You can take 54GA for the short term. And then see if you have complied with those conditions laid down in those specific sections, you will be able to minus that deduction. In short, from gross, when you minus those exemptions, you will be getting a net result called net STCG. STCG का मतलब है short term capital gains. Once you arrive at, you have to pay and calculate your tax liabilities. And normally we know short-term capital gains are always charged at the normal rate of taxation in whichever bracket you are. Whichever bracket you are. Now have a look between two graphs, one for short-term, one for long-term. And you can see that basically both are moving on the same line, full value, transfer expense. Where it differs is basically here, okay, you take cost and cost of improvement, whereas there you take is the index cost and the index cost of improvement. So my question therefore here is, what is that index? When we brought this index? What is the purpose behind taking this indexation? I think if you don't know this, then probably you have solved a number of problems without knowing the logic behind them. Let me tell you. It was somewhere in the era of 91, 92 to the year 95, 96, where back-to-back five budgets of the central government were placed by the only one finance minister, and that was Manmohan Singh. He is an architect of this whole concept of indexation. He has talked about level playing fields. The field has to be leveled up between the two. I can make this example much easier by narrating you a very small incident, though it's far from the reality but very connected to the concept index. Let's say you all must be watching it earlier on the television was WWF. Maybe not natural, maybe all predetermined fights between the wrestlers. And I had an opportunity of seeing this live WWF wrestling match in US. And we all friends were there, and then somewhere before the end came, the referee hold the hand of that wrestler and asked the entire audience if anybody is prepared to fight for him, or else he's going to declare him as a world champion. And it always happens when you sit among your friends, you start to pull the tails and legs of each other. So some of my friends raised my hand and they said, here is the person who is going to fight with him. And I was saying, no, no, and they just pushed me right into the ring. And imagine that 6.5 feet with 200 and 250 kgs, the big giant versus me standing in that wrestling ring. And I said, I can't fight, but then they are from US, they say, no, no, we give fair justice. They asked me what is my weight, and I just said 50 kg, and the guy was about plus 200 kg. So what they did was, they tied up the weights on my hands as well as my legs to make it equal weight to that of wrestler. So this is a level playing field. I could not even raise my hand or a leg. The guy came, gave me 2-3 bouts, and he was declared as a winner. Today, situation between that wrestler and me is in my indexation, where in 2017, if you are selling it versus the asset, the cost when it was purchased and purchased in 1995. 22 years back it was purchased, my dear friend, the prices were too low at that time. Because of the inflationary trend, today the prices have gone up, and therefore you get a huge selling price. So selling price is huge like that wrestler, and the cost is too small like me. Now if you compare that selling price too huge and a cost too less, what's going to happen? A gigantic profit will appear, which should be completely wrong, and therefore indexation was a must. 1981-82 was the year selected at that time. As a base year, 100 was allotted to that year, and accordingly the index was created. So you get proportionate index value. Recently, in 2017 budget, the government has changed the base year from 1981-82 to 2001. So now the base year from 2017-18 onwards is going to be a different case. And I therefore appreciate the approach of the government in bringing this index cost of the asset and the index cost of improvement, meaning they are creating level field for the selling price as well as the cost price. So there won't be injustice to the assessee. Assessee would get the proper weightage of increased cost, and thereby his capital gains under this formula would be properly and fairly calculated. Again, I will get gross long-term capital gains, from which again I have a series of those exemptions which I can minus from 54 onwards to 54 GB. I have to be very selective depending upon conditions which are satisfied. I think I will be able to calculate the long-term capital gains. 48 only tells me how to calculate capital gains if the asset is short-term or if the asset is a long-term capital asset. Besides, Section 48 has a provision 1. Now you'll ask me, sir, what is this provision 1? It is a diversion from what we said right now here. I am coming with a complete diversion. Diversion is this: that the capital gains for whom we are going to calculate is supposed to be always a non-resident. And such a non-resident has earlier purchased the shares or debentures of an Indian company, but while purchasing, he has purchased in a foreign currency. This is a background that a non-resident has purchased either the shares or debentures of an Indian company, but in a foreign currency, and today that non-resident decides to sell off that shares or debentures. But today when he sells it in India, he is going to get the consideration is in rupee value. Although we are going to get the consideration in rupee value, we are going to calculate the capital gains is in that foreign currency in which he has purchased. Let's say, for example, the currency he had utilized at the time of purchase was none other but US dollar. So provision 1 says, okay, look here. The provision 1 says here that the full value of consideration, but the currency at the top you see is the US dollar. So what I will have to do? I will have to convert my current rupee consideration into a US dollar. So you'll ask me, sir, what is the rate? Because the rate changes every day, every hour. Therefore, my provision 1 says here that you will take the average telegraphic transfer rate of a buying and a selling, average telegraphic rate of buying and selling of that dollar rupee. On what day? On the date of transfer. जिस दिन आपने बेचा है, बेचने के और खरीदने के रेट अलग होते हैं, तो आपको उसका दोनों रेट लेना है, एवरेज निकालना है और उस एवरेज रेट पे कन्वर्ट करना है रूपी इनटू यूएस डॉलर. But that average rate will be taken based on the buying selling rate on the date of what? Transfer. Minus the transfer expenses. They are also incurred in rupee value. So convert that rupee value transfer expenses into US dollar, once again using the average telegraphic buying and selling rates as on the date of transfer. So once you minus transfer expenses, you get is the net consideration. And as usual, I should minus the cost of the asset, of the shares. When I have to take the cost, now comes the question, what rate I should take. Again, I will take average telegraphic transfer rate of buying and selling, but not as on the date of transfer, no, as on the date on which it was purchased. जब कभी आपने खरीदा होगा वो शेयर या डिबेंचर्स, उस दिन के बाइंग सेलिंग रेट लेना है, उसका एवरेज निकालना है and convert your cost into US dollar. Come back, minus that cost, so you will get is your capital gains. And once you get the capital gains, but you are getting in what? US dollar. Your tax will be charged in rupee, not in US dollar. Therefore, again, this capital gains needs to be reconverted into rupee. And when are you going to reconvert? As on today, as on the date of transfer. So what again you are going to take? You are going to take now not that average, no. You are going to take only the buying rate as on the date of transfer. Not buying and selling, not two. Only buying rate as on the date of transfer and convert the US dollar into rupee value, and whatever rupees come, that is your capital gains under the provision one. Somebody will ask me, sir, are you not going to distinguish between short-term, long-term and provide indexation? The answer to that is no. The provision one says no indexation will be available to that non-resident on this conversion into foreign currency. Meaning, without any indexation, the capital gains will be calculated this way. So 48 give me three things. 48 first gave me a mechanism how to get short-term capital gains. Section 48 gave me a mechanism of how to calculate long-term capital gains. And the provision 1 of the section 48 gave me a mechanism of how to calculate capital gains for a non-resident who has purchased the shares debentures originally in foreign currency and today he decides to transfer, then what that methodology is to be adopted is given by that provision. If this was not enough, the computation takes a slight jump from section 48 to section 5050. You say, what is that? My dear friends, assets are divided into two types, broadly. Depreciable assets and non-depreciable assets. I was saying, depreciable assets and non-depreciable assets. Section 48, short-term, long-term, was dealing with non-depreciable assets. जब कभी depreciable assets की बात आएगी और depreciable assets अगर हमने बाजार में बेचे हैं और उसका अगर हमें capital gains गिनती करनी है तो 48 को छोड़कर हमें जाना होगा section 50 पे. So what does this 50 talks about? The 50 talks about block of asset. अब पूछेंगे block section 32 में ले जाएगा. So now depreciable assets are maintained under a separate block of assets. और उस block में कई सारे assets हैं. Let's say for example the plant and machinery. Similar assets with identical rate of depreciation are put together, are grouped together, and that is why they are called as block of assets. अब हो सकता है कि इस ग्रुप के सारे assets हम बेच दें, या ये भी हो सकता है कि इस ग्रुप में से we are very selective, we sell a few and we don't sell the other. So there are two possibilities. A part is sold and a part is not sold. If that is the case, I say the block continues even after I sell. Because a part was sold and a part was not sold. But if I sell everything, then nothing is left in the block. Then I say block is going to discontinue. So while reading the question, find out whether it is a case of a block that is continuing block or whether it is a case of a block that discontinues. Find out whether all the assets were sold or a few of the assets were sold. I am taking the first case, few were sold. Formula slightly differs. See what that formula is. For a block that continues, it starts with the full value of consideration. But these are depreciable assets. Therefore, straight away I move on with the word less and see less are what? These assets are never maintained at cost. So we write less the opening WDV of the block. What is WDV? The return down value. The opening WDV of the block, to that you add, and you add the cost of the asset acquired during the year. कोई नए asset अगर खरीदे हैं, तो साल की जो शुरुआत की opening WDV थी, उस opening WDV में add कर दो नए asset की cost. If you have purchased, if not, forget that. To that you also add are your transfer expenses incurred during the year. तीन चीजें हुई, opening WDV, cost of the asset purchased during the year, and the transfer expenses. And all the three should be minus from the full value of consideration. If that is done, and then you see what is the end result. The end result can be three probabilities and three possibilities. आप पूछेंगे कैसे? मान लो जैसे मैंने यहाँ पे लिखा है, from 110 is my selling price minus that opening WDV plus the cost of the asset plus transfer expense all equal to 100. So 110 minus 100, I am left out with a surplus how much? Plus 10. And that plus 10 will be called by the word short-term capital gains, STC. That's the first probability. I'm not going to change the cost. Cost always remains the same. What can change? Selling price. पहले के हिस्से में मैंने selling price दी थी 110 minus all that cost 100, so I got a profit of plus 10. Now let's take me a second gain. My selling price becomes 100. So selling price is 100, cost is 100, 100 minus 100, 0, nothing is left out, so no profit, no loss. And the third possibility is now, I change my selling price from 110 to 100, I make it now 90. 90 is the selling price, the cost is 100, so 90 minus 100, I will get a negative answer, the minus 10. And most of you will jump in concluding, sir, it's negative, therefore you should call it a short-term capital loss, my dear friend. It will not be a mistake, but it will be a biggest blunder. Because the first condition I said, it's the case of a block that continues. If the block is going to continue, there are assets here. And if there are going to be assets, at the end of the year, I am supposed to provide is what? Depreciation on the WDV closing. So if I get a negative value here, it represents a closing WDV, and on that, the annual depreciation will be provided. This is the biggest room where a student can make a mistake. I change the entire scenario. I say now, number one, the block is discontinuing. मतलब मैंने सारे के सारे assets बेच दिए. अप्रैल टू मार्च का ईयर है. दिसंबर में जाकर मैं सारे के सारे उस ब्लॉक के एसेट बेच देता हूँ. फिर से वही आएगा, फुल वैल्यू ऑफ कंसिडरेशन माइनस व्हाट, ओपनिंग WDV साल की शुरुआत में, एट कॉस्ट ऑफ एसेट परचेज ड्यूरिंग द ईयर, अगर परचेज किए हैं तो, एट द ट्रांसफर एक्सपेंस माइनस एवरीथिंग, and the result will be called the short-term capital gains. Let's say I again put that three scenarios. Number one, my selling price 110 minus the cost I keep it as it is 100. So 110 minus 100 plus 10, I am positive, and therefore I call it as a short-term capital gains. Number two, I reduce the price to 100, selling price is 100, cost is 100, 100 minus 100, nil, no profit, no loss. And here comes the last scenario, third. My full value of consideration is 90 minus that cost which is 100. So once again I am resulting into a negative minus 10. And now you will say, sir, what is this? I ask first question, is block continuing or is block discontinuing? And I had said block is now discontinuing, meaning no more assets are left now. इस ब्लॉक में कोई एसेट है ही नहीं, और जब अगर ब्लॉक में कोई एसेट है नहीं, then negative answer, that minus 10 should now be called by the word as short-term capital loss and not the closing WDV. ब्लॉक में कुछ है ही नहीं, आपको कोई डेप्रिसिएशन प्रोवाइड ही नहीं करना है, तो जो सारा नेगेटिव वैल्यू बची है, इट विल बी ऑलवेज कॉल्ड बाय द वर्ड एज STCL. तो दो बार नेगेटिव आई, एक बार जब ब्लॉक कंटिन्यू होता है, जब तब नेगेटिव आई, हमने कहा दैट विल बी क्लोजिंग WDV और दैट डिप्रिसिएशन विल बी प्रोवाइडेड. दूसरी बार नेगेटिव आई कब, व्हेन ब्लॉक इज डिसकंटिन्यूइंग, then that negative will be called by the word as short-term capital loss. Many of you will say, sir, these machineries were 5 years old. 5 साल के पीरियड ऑफ होल्डिंग के मुताबिक ये तो लॉन्ग टर्म कैपिटल एसेट है. जरूर है, तो फिर उस पे जो मुनाफा आया, कैपिटल गेन शुड बी कॉल्ड एज लॉन्ग टर्म कैपिटल गेन्स, एंड द आंसर टू दैट इज नो. When it comes under the block of asset, it loses its individual identity, and therefore it is the inbuilt characteristic of the block of asset under section 50. Then any gain that may arise or any loss that may arise, whether the asset is a short term or whether the asset is a long term, but the net result will always be called either by the word as short term capital gains or will be called by the word as short term capital loss. There is no concept of long term capital gains or long term capital losses as far as depreciable assets are concerned.
So students, have you followed all the provisions and sections in this topic?
Yeah!
Have you also followed all the case laws and CBDT circulars?
Yeah!
I am sure you will be then thinking the tax is now easy for you.
Yeah!